Canada's weekly video mortgage news podcast. And today we're going to get right into the 5 first-time mortgage mistakes here. And we got Sam Thompson with us. And, we're really excited and really pumped to be on our episode 75 as well. So, Sam, let's get right into these mortgage mistakes today.
Yeah, it sounds good. We've got an awesome list for the viewers today because, the biggest thing about a lot of these mistakes is we see clients come in with them all the time, especially, the first-time buyers. And a lot of the mistakes, they don't even know that they are mistakes or that they're making them. Yeah, like you're saying, it's going to be a really good episode. Get some great content to make sure that you guys can avoid these mistakes if you are a first-time buyer.
Absolutely. And Sam, what I'm really pumped about as well is that you and I have been doing these webinars and seminars for years now, and we communicate these mistakes to our first-time buyers, on a regular basis, just getting these out to them. And, we do have also a webinar that you're running for, first-time buyers coming up in just a little bit. We can talk a little bit about that, but these are just a little bit of the information that you cover at that webinar.
Yeah, exactly. We've covered this information, and it's been really helpful for a lot of first-time buyers because, again, they're not sure that they're making these mistakes. And it's a portion of the webinar. There is much more information. But again, going into the 5 mortgage mistakes, the very first mistake that we have, which is super common, is just ignoring your credit score. I feel like a lot of first-time buyers aren't very well versed in, what their score is, what contributes to calculating that score. So they go in almost blind in that area.
Yeah, and Sam, that's right. What ways can buyers get access to their credit score?
Yeah, there is a lot of free options. I know that there is a number of websites out there like Credit Karma where you can check your credit score for free. A lot of mobile banking apps I know do a soft credit check as well, which is going to give you an idea of what your score is. And I believe that you had mentioned on a previous video that you are able to write a letter. So it's not free, you got to pay for postage, but you can write a letter to Equifax to receive your credit report directly from Equifax as well.
Yeah, that's right. You can do the snail mail option if you're really inclined to do so. It is still going to cost you that stamp and the time to mail that envelope, which sometimes never gets done. But let's and also there's the whole consumer proposal part, right? We have clients that sometimes they've gone through a consumer proposal, Sam, and they've completed the consumer proposal, they successfully exited it, but at the same time, they really haven't done anything to their credit at the same time. So maybe you can tell our viewers a little bit about what they would need to do after consumer proposal to make sure that they're not ignoring their credit score to get the mortgage.
Yeah, for sure. Again, this is a really common thing that we see a lot of buyers come in with. They have paid it out, it's been fully discharged, but there's not much information out there for the follow-up. And what we really want to stress for anybody in that situation is to follow what's considered the 2-2-2 rule. So that's having 2 active credit lines for a minimum of 2 years with a $2,000 limit. So the easiest way to do that is past the discharge date to get 2 new credit cards. And again, I find the biggest thing that kind of catches up first-time buyers is the fact that it does have to be there is a few lenders that we might be able to work it after 1 year, but it does have to be 2 years and 2 credit lines. We've seen clients before, they have 1 credit card since the discharge. They've waited a year, they've been building their credit, but unfortunately we are pretty locked to having at least 2 credit lines for that 2-year window. So it's an important step, and you don't want to get stuck waiting the 1 year, waiting 2 years, maybe thinking you're doing everything right, but you're still just short of the mark.
Absolutely, Sam. Yeah, it's never fun being short of the mark too, especially when you get out of consumer proposal too, because you're feeling happy and confident coming out of that time that you've gone through. So to have to also pay attention to your credit and be so aware of building it right after consumer proposal. That's a step that's frequently missed. So definitely give Sam or myself a shout if you want some more advice on that. This is anyone that's gone through a bankruptcy or consumer proposal. We can help you rebuild your credit score, and there's some really good programs and credit cards available for those credit lines that you're suggesting, right, Sam? So we can get all that done for them. So another thing that we can look at, the second first time mortgage mistake, and it's a big one. I'm going to take the lead here and say it's not reviewing your options. And as a mortgage broker, you and I, Sam and Terry Lynn, we're always working hard to make sure that we are providing clients with all the options, whether it is the red bank, the green bank, the blue bank, the yellow bank. It's the best rates, the best service, and the best turnaround times. And sometimes there's features, porting. We're doing a lot of porting recently, and that's something that if someone goes to their own bank, they're only going to get that one option. So I would like to just say not reviewing your options is a big mistake, and maybe you can add a little bit to that.
Yeah, no, it definitely is true, because there is a lot of factors in your mortgage, what your payment frequencies you're looking for, fixed versus variable rate. There's a lot of moving parts to a mortgage, and, you don't want to read, one really exciting rate hub article and then come in, sort of locked in one track mind of this is what I saw, this is what we should do. Because again, Joe, like you're saying, there's a lot of options out there, whether, a cashback mortgage or promotional mortgages with certain lenders are running. You can really take advantage of those, and it's actually going to help you in the long run, be better off with your mortgage.
Glad you brought those up, Sam. Yeah, those are really good options. So make sure that you connect with a professional that has access to many mortgage products, like Sam, myself, Terry Lynn. Give us a shout, and we can make sure that we're not only comparing the best options at the green bank and the blue bank, but also the yellow bank and the orange bank and the red bank and all the banks, so you can make sure that you have sort of an unbiased view of all the options there. Another option, and being one of the top 5 mortgage mistakes, and this is something that, Sam, it's had to become a necessity to get in the market almost to make this mistake. I would say, but at the same time, is it a mistake? Let's take a look. And that is borrowing too much. Let's talk about that.
Yeah, as you mentioned, the surge in house prices over the last, couple of years has made this point, again, challenging, like you're saying. Is it a mistake or is it a necessity? Because we are seeing, especially first-time buyers, they really do have to stretch themselves to be able to get into the market, just because of how high the price points are. Aside from moving to somewhere more rural where it's maybe softer, or, like we've seen a surge of people moving over to Calgary. Those are all factors to consider. But you do want to make sure that you're borrowing within means, and even if we can get the mortgage, qualified and make it work out, you don't want to end up, that your entire paycheck is going directly into the mortgage.
Yeah, I agree 100% there. And to be able to get into the house market right now, it seems to be that the only options are the high price points right now, unless that buyer wants to move to a completely different area of the country. And, we've also seen a lot of that happening. A lot of buyers packing up, being able to work from home, and they're moving to Nova Scotia, New Brunswick. I'm hearing commercials on the radios from fellow mortgage brokers that work in the same industry in our city now advertising that they have a Nova Scotia program. I mean, it's really nice to see that, it's become sort of a mainstream thing, so much that we're hearing about it even on radio commercials. But to get into the housing market, someone will need to be able to take on this much debt. And to do that right now for the average priced home, and we'll talk about that shortly, is they're going to have to take on sort of the maximum mortgage they can. and they're going to also probably need to take on a side gig and maybe a second side gig for the family. And we talked about this a lot, Sam.
That's right. Yeah, the double side hustle. Start a Skip the Dishes or DoorDash account, just to have those additional income sources.
Yeah, or maybe like one of the family members runs a side business doing something from their home, or like part-time. We're seeing that a lot, and we're seeing a lot of our clients have their 2 full-time incomes, and they also have their own side business, and that's helping them get into the market and not be so house poor at the same time.
Yeah.
So I guess one thing that I would recommend is don't be house poor, and to avoid that, try to get yourself a side gig. It's hard to say that, but it's necessary, I think.
Yeah, for sure.
Number 4, why don't you take the lead on this one, Sam?
Yeah, so number 4 on today's list of top 5 mortgage mistakes, because there likely is more. But number 4 is forgetting about closing costs. This is something that is quite commonly overlooked by new buyers, because they tend to be fixated on, okay, what's the maximum purchase price I can afford, and what's the minimum down payment I need? And for a lot of first-time buyers, that's enough to focus on, right? Is trying to get that minimum 5% down. But it is important to note that there is additional closing costs that do come out of pocket that you're going to have to pay on top of that minimum down payment amount.
Yes, closing costs can get pretty high too, especially when we're looking at house prices that are in excess of 500,000, because all of a sudden you have land transfer taxes that all of a sudden become part of the mix that are at a higher rate. Also, if that person is needing to take on an alternative lender, and these days, right, and we're seeing a lot more folks take on alternative lending because they want to be able to borrow more than the typical orange, red, green banks allow them to. And a lot of the times we're able to qualify those clients, especially those self-employed clients, for 20-30% more mortgage money, which is quite considerable. But caveat being, it adds to the closing costs, because those lenders, they do charge fees to be able to borrow, to be able to let those clients borrow extra funds. So it all adds up, and make sure that your mortgage professional, whether it's Sam or myself or Terry Lynn, we make sure that we connect with you and go through your closing costs with you to make sure that you're covered and make sure all the items are accounted for. And I know that you and I do that for our clients already, Sam, when they're calling us to make sure they can get a mortgage on their next property.
Yeah, exactly. Because closing costs, for anybody who's not familiar with the breakdown, it includes things like, your land transfer tax fees, legal fees, title insurance. So also, as a first-time buyer, it is important to note that even though you're saving this amount, there are some grants and incentives that can help with this. If you've seen our previous videos, we have mentioned there is a land transfer tax rebate if you're a first-time buyer. So this can help to alleviate some of these costs. But again, it's important to make sure you have those funds available.
Absolutely important to have those funds available. And in the event that you can't, there's also options available in the mortgage world that Sam and I can help you set up with, like cash back options and additional borrowing that, in the absolute worst case scenario, perhaps there's another solution. And it seems like we're always looking for solutions, right, Sam?
That's right.
Yeah. All right. 5 mortgage mistakes, 5 first-time mortgage mistakes. We've gone through 4. Let's look at the last one. But before we look at the last one, let's just recap the first 4. So that is ignoring your credit score, not reviewing your options, borrowing too much, which almost has become a necessity in today's market, but can be mitigated with a side hustle.
Yeah.
Don't forget about closing costs, number 4, and number 5. Not getting pre-approved. Sam, tell us about how easy it is for someone to get pre-approved.
It is honestly very easy to get pre-approved. We can, start it off with a 20-minute, 30-minute phone call with Joe, myself, Terry Lynn. Any of us would love to take down, your information for the file. And then we only need a few documents to get sent in. And once we get it into the lender, the turnaround time's typically within a couple of days. So if you start the conversation with us on a Monday, you should be leaving the week on Friday with a pre-approval certificate. And honestly, in today's market where house prices are so high, and again, as we chatted, a lot of people are sort of stretched to their limits without taking on, additional side hustles. It's important to know what you qualify for. And that's that security that you get with the pre-approval is we've looked at your documents. We can give you, an exact estimate of, okay, this is what you can actually qualify for.
Yeah, it really helps out. And what I've really liked that we've been able to do, Sam, that's something that banks really can't do when someone visits their bank, is to be able to provide someone with not only their best rate option, one that's going to save them the most money, but in this market also an option that they can qualify for with other lenders for a higher mortgage amount, but at a higher rate. And to be able to see those options, scenario one, scenario two, I know we do that a lot.
Yeah.
And just to compare them and just have the choice, I feel we empower clients to be able to make their decisions in a better way, in a much more knowledgeable, educated way. So yeah, definitely give Sam a call, myself, Terry Lynn, to get started, making sure that you don't make any of these 5 mortgage mistakes. Even if you're a second-time mortgage holder or a third-time mortgage holder, make sure you don't make these mistakes. And we got a lot more to talk about if there's more time, but we need to start moving on to the news. So let's look at what's been happening with the mortgage market. I know that house prices are going crazy. There's a lot to talk about there as well. We've been seeing some rather concerning trends as well. Rates, what's happening with rates? And with that, we have that 5-year bond yield that, Sam, you track for us on a weekly basis. Let's take a look at what we have there today.
Yeah, absolutely. So as you can see, we are still in a high range for the bond yield, but we actually have come down off of last week's market high for the last while of 2.82%. We're sitting at about 2.64%. We've seen the impact of this high bond yield in that 5-year fixed rate that again has been going up at least weekly, almost for some lenders multiple times during the week. But we seem to have sort of over the last few weeks hit a tightening range a bit higher than previously. So we seem to be sticking around a 2.6% range, with again that high from last week being 2.8, but back down to 2.6. So again, it's indicating that those fixed rates are likely going to stay high and could have the possibility of increasing slightly, but we'll have to see where the bond deals go after this dip, whether it stays in a tightening range or what's to come for that 5-year fixed rate.
You bet. And right now with 5-year fixed rates, I got this question last night, and where are fixed rates right now for a 5-year mortgage rate? And I would say mortgages are no longer on sale. We're probably looking at high 3s, low 4s at this point, depending on, if your mortgage is with CMHC insurance or not.
Right.
But yeah, so with this bond yield, I'm hoping it goes down because it will really relieve some pressure for fixed rates. However, the trend has been up, and we'll follow this on Canadian Mortgage Weekly. Thanks, Sam. Let's move on to the CDOR rates. And with that, we use this metric here on Canadian Mortgage Weekly to determine whether or not the variable rate mortgage is a viable and competitive option when you're shopping for a mortgage. So when you're comparing that to a fixed rate. And as you know, Sam, right now, the spread between the fixed and variable has been very large.
Yeah.
But with the CDOR rate, it has been changing as of late. So tell us a little bit about that.
Yeah, we've seen the CDOR rate on a steady increase. We have seen it slow since we've seen the last two rate hikes from the Bank of Canada and that increase to the prime rate. We are seeing that it's increasing at a lower like a lower intensity. And again, when we look at the CDOR rate, what we're really looking for is what's its variance to the prime rate, which again, now that the Bank of Canada has increased rate, prime is currently sitting at 3.2%. So when we look at the variance and the difference between the two, it still is under 2%, which again is still indicating to us that the variable is a good option. Even though it's undergone some rate hikes recently, it is still a viable option compared to the 5-year fixed rate.
And that's correct, Sam. Like, I still think variable is a viable option, so much so that I myself took a variable in my recent renewal. And with clients, if they want to take a variable and they are prepared for the additional added risk with the variable of the payment or rate changing, when compared to the fixed right now, they stand to save quite a bit on the front end, because with the fixed rates right now, paying over 4% will immediately get you start paying that higher interest amount right from day one.
Right.
But taking a variable rate at such a lower rate, you're going to start paying off that principal just a little bit faster and paying a little bit less interest just a little bit right away. And then if the rates go up further, they could. But to meet the current fixed rate, they would have to go up quite substantially.
That's right.
So we talk a lot about this, but then again, fixed rates do provide a lot of security. So sometimes that security is worth something to some people as well. Yeah. Let's keep looking at the next item here on Canadian Mortgage Weekly, and that is the Bank of Canada interest rate announcement. I know that we get really excited about this on Canadian Mortgage Weekly. We recently had a really great time at the pre-rate show and Bank of Canada interest rate announcement with monetary policy overview last time, Sam, didn't we?
Yeah, we did. And, the Bank of Canada didn't disappoint this time. We had seen many articles. There was a lot of hype and build up to the rate announcement, which was on the 13th of April. And we did see a supersized rate hike of 0.5%.
We did. And with that, we did get a lot of interest from a lot of folks talking about where rates are going. It's created a lot of conversation with a lot of people that I'm speaking with right now, and what's going to happen with rates in the future. And I think the going sentiment is that we are trending upwards. I think for variable rates, it's pretty safe to say that we will still be trending upwards for the near future. But what do you think, Sam? I don't know if it's going to be long-term that the variable will lose out compared to the fixed. I think that in the short term, we have some increases warranted, because the Bank of Canada has gone on record in saying that future interest rate hikes are in the cards. And that is from the monetary policy report. I mean, we read it over and we saw that it's almost as if the Bank of Canada is really monitoring the economic activity over the next few months, specifically to see what's going to happen with inflation.
Yeah, exactly. I mean, I think, I've read an article earlier this morning where, again, like you're saying, they had forecasted the likelihood of another rate hike at the next rate announcement. So again, I don't know if it's sustainable into the future over the next few years that we'll see consistent rate hikes, but I think for the immediate future, or, as we move towards the, the back half of the year and finish off 2022, I think for sure we could see a few more rate hikes before the year's up.
Yeah, they're talking about another supersized rate hike. However, that may be the last one for the next little while. And if that did happen with the current fixed and variable, the variable would still win out. So it's interesting to see it that way. Anyway, stay tuned. Next, not inflation announcement. Next Bank of Canada interest rate announcement is June 1st, 2022. Stay tuned. Sam and I will be here for our regular pre-rate show, as well as the live announcement here on Canadian Mortgage Weekly, Canada's weekly video mortgage news podcast. Let's take a look now at the national house price. And I know that this one is probably the most talked about aspect. And what really has been triggering that chat is that recent trend that we've seen from February to March. And also, we've noticed a little bit of a trend live from our office, just seeing the way things are going. Tell us a little bit about the price trend there, Sam.
Yeah, I mean, so we reached, that peak that you see on the chart in last month's report from the CREA for February, closing off at, I think it was 816,000 as the average national house price. And we saw that dip in March down to 796,000, making it, maybe slightly easier for families to afford a new home. That brings the annual household income needed to about 165,000. And again, like you're saying, we have noticed I don't know if I'd call it a softening of the market, but we've definitely noticed a less aggressive market on the housing side, with sales coming in maybe closer to list. Maybe they're coming in at some points under list, compared to what we had seen at the beginning of the year, where it just felt like there was a lot of pressure pushing that house price higher and many offers being made considerably over list and asking price.
Absolutely. I've seen that. We've seen that. It's very evident, actually.
Mm-hmm.
And, with that recent trend, we did peak. And with the recent trend going down, is it a concern? And that's what a lot of people have been asking. And I know that there's a lot of emotion behind house prices. There's a lot of current speculation and, FOMO happening with the housing market.
Mm-hmm.
However, there's also the trend that we saw on this graph from the peak last year in February, March, and how it trended down for the rest of the year until the fall. Yeah. So is this recent decline of house price trend long-term, or is it just a natural occurrence of a more balanced, less aggressive market, as you called it there, Sam?
Mm-hmm. Yeah, that's a good point.
We did see a lot of houses sell for quite over list at the beginning of the year.
Mm-hmm.
Also, we did see a lot less houses available at the beginning of the year.
That's right.
Yeah. Be interesting to see what happens with the house price going forward. We're at sort of a peak, but at the same time, we're in this lull where in the springtime it's expected. So I think if anyone is interested in following this, they should stay tuned for us next week to see what's happening on Canadian Mortgage Weekly.
Yeah, of course. We'll definitely be tracking, to see what we're noticing in the market, and if any, new occurrences happen or notable news that could shift where the prices are going.
Yeah, absolutely. In the meantime, I would say that the buyers shouldn't really be worried. I think that the long-term trend, and from what I speak with, when I speak with real estate agents, and, we're not the experts in the real estate side as much as they are, I would say. I got to give them credit. They look at those numbers every day, same as we look at mortgage numbers every day. But a lot of real estate agents have been commenting, this is normal. The long-term trend is going up. But again, we will follow that on Canadian Mortgage Weekly here. And Sam, we got our next episode next week. We got our special guest, and we also are starting a new month. But before we get into that, let's just take a moment. I want to introduce Sam Thompson. Sam Thompson has been a mortgage agent with the Mega Mortgage team now for over 2 years. And Sam, Episode 75 here. Great way to kind of cap off also a month of first-time homebuyer series. Thanks for always providing all this great content here, and great to have you on the show. Sam's originally from Ottawa, and if you don't know Sam, he lives in Barrie, and with his wife and pup there. Sam, great to have you on the show today.
Yeah, thanks so much for having me. It was a great episode 75. Man, it feels like we've been doing these videos forever. It's awesome. And yeah, of course, thanks for adding your insight, Joe. You've been in the industry yourself for over 11 years, and you currently live up in Aurelia with your wife and 2 kids. So thanks for having me on the episode and covering these awesome topics with me.
Absolutely. Let's just also take a moment and let everyone know that, Sam, you're running a webinar next week for first-time home buyers. It'll be run on May the 5th. We are running an in-person and streamed event for the first time in just over 2 years. So that will be really exciting. Sam, how can people find out about this event?
Yeah, of course. So if you go to home-buying-seminars.ca, you can find the listing of all of the upcoming webinars and events, and there's going to be a link for you to sign up where you can find more information about where it's held in person. That would be very exciting to, as we enter into spring, 2 years past COVID, to get back into some in-person seminars. And again, it will be also streamed live as a webinar as well if you're unable to make it in person.
Thanks, Sam. Very much appreciate that. And also wanted to take a moment and talk about next week. We got our special guests, and next month, for the month of May, Canadian Mortgage Weekly will be focusing on property investor mortgages. So with that, we got some really exciting episodes lined up for all you investors out there. We'll be looking into things like how to buy a rental property with no money down. We'll be talking a little bit about getting started in rental properties, some tips. Sam and I will go over those. And also the infamous BRRRR method. We got a lot of stuff coming up. So, but next week, hopefully, get a nice little update about the market again from our special guests, as well as some great tips on rental property mortgages. In the meantime, stay tuned Thursday next week for Canadian Mortgage Weekly for that episode 76, Canada's weekly mortgage video news podcast. And